Okay, welcome everyone to Monday, end of day trading for the winners and losers for me, Gregory Santana. And you can see XLE took the lead with 123%, still in profit. We're still in the game. So let's go to the charts and see where it's at. There it is. So what that means is this. We are moving to stop. Short defense now takes over. Yes, my short defense is 100% ROI. So once I cross the 100% ROI, I am right there at the bottom of that candle. Each of you will have to decide what your buffer will be, but that will be a very good place to stop, put a stop. And as I mentioned before, this was for low-hanging fruit. What low-hanging fruit? Well, we have like 3, maybe even, I know we have 3, and I'm going to have to go, I'll go to my spreadsheet to just remember what is my dead leaders. Okay, my dead leaders are alpha account. Yes, we're in the alpha account. Okay, in the lost leaders, deadly, and these are the dead ones. These are ones I'm never going to get my money back no matter how much I try to find their stock because they're gone. So there are 4, and I said yesterday, or I said on Friday, that we reach, if we reach over, let's see what we got, making money here. The one dead leader owes me 57, that's the low-hanging fruit. Then the next one owed me 60. Then the next one after that owed me 108 for 225 right there. Then the next one that owes me on the dead leader side that has gone is 198. There we are, $423. So we get over $423 from this 123 ROI. We're going to be killing 4 off the lost leaders list. Also, something else I need to bring up, but we'll bring it up in a minute. Let's go to the numbers. So going to the numbers, how we go? There we are. And we got the numbers on the left, we got the charts on the right for direct comparison. And there it is, XLE expiring in December, started at 269, 123% ahead. So the money is, oh, where is the money? Oh, sorry guys, I didn't put the money here. So let me put that here so then we can keep track of that too. Okay, so we don't need much of the expiration date. You can take the expiration dates right here in the code. Learn how to read this code and be able to see it. There is the stock symbol, there is the year, 19, there's the month, 12, 20 is the day. The type of option I'm in is in a call, and my strike price is $58. So this is a December expiration. The important part is we're at $667 profit. So we have now just in the process of killing 4. Now, do I take them off my list? Not yet. This trade is still open. Now, if tomorrow the world goes tipsy-turvy and energy takes a dip, I'm out. Now I can go back and I can say, okay, how much profit came out minus, so this is a minus. And if we get stopped out tomorrow around, I would say, let's say a $60 drop, pick up 177 net, 4 dead leaders come off my list, and away we go. And adds a little bit more to the trading capital. So that said, we now have to look at, so this is where my stop would be. So where we go now? AAP. Now, AAP fell back a little bit. Oh yeah, it happens. There we go, positions, AAP. And sure enough, look, we were here and we cut now we have a green tombstone. This is a green tombstone. I've sort of forgot my candlestick theory, so I'm just going to go with my own chart. The point is that the midfield is moved up, so I will be moving the midfield out to here. So the midfield will move here in defense. because it's over my secret number of when it crosses. When it crosses this, when this ROI percentage crosses, then I move I move from my long range defenders to my short range midfield defenders. And midfield is carrying the ball, and they're running on down the field, catching up to here. And when we have when we have the 100%er, we'll be right there. Well, right there, actually. We get the 100%, we'll be here. But we're not there. But the bottom line is that we are sitting with 1820. 1820 minus 570 that is so we'll walk away with a little under $1,300. That's if we get out here. If we don't get out there, we'll get out when it gets out. We're not going to fret over it. The bottom line is we let the market play its game, and we just got to be on the ground to cover it. So moving on, ABB. Now remember about ABB. ABBV did not owe us any money. This is a pure profit maker. That's what this is about. It's a pure profit maker. How did we get this? We got this off our scanner. We ran a scanner last week. Now I got all my notes are all over the place. Here we go. We ran this scanner last week, and then it came up at the top of the list, and I said, you know, we had extra money. None of my lost leaders were in position to help us. So ABBV qualified to get onto the field. Yeah, something called up from the rookie farm. So where it's at 34%, $93. That's still $93 in my pocket, minus about maybe, but it's only one contract. It shouldn't cost me more than a total $11. It's $80. Yeah. Tank of gas, 2 tanks of gas. But the bottom line is, it's winners build confidence. It's extremely important that you celebrate your winners, no matter how small they are. There's a hedge fund manager named Marcavini. Let me stretch this out. I was going to make this a little bit more presentable for you guys, and I messed up. So let's drop this down so we can cover that backspace there so it doesn't that's so distracting. Okay, and back to the game. Okay, so many hedge fund managers. I just interviewed 4 this past week, and the bottom line is they watch for a peak in the profits, and then they take their profits. So that said, this is the brand new one, doesn't owe us any money, so it's all profit. It's all good. All right, CBS. Now CBS, do recall, CBS is a tough nut to crack. Why? Because it does owe us a ton of money. In fact, 1.7 tons or whatever percentage comes out to be. The bottom line is that it's still something. $410. If we got out and got $410 out of the trade, the end result is that it's a smaller nut to crack at the next opportunity. You can see we have some dojis in here. So what does that mean? That means that this movement going down is losing think of it this way. The steam seeping out of the air balloon is now been patched up, and there's possibility of an upturn. The indicators aren't too favorable to it, but you know what? Like I said before, the market tells us all we got to do is just follow it. Don't fight the trend. Don't fight the market. It's bigger than us, prettier than us. As my headmaster, my first school, Courtney Smith, said, and yes, I do recommend Courtney Smith to start off your education in trading. Said, don't fight the market. It's prettier than me and has more money than me. That going on, now we have the T minus. Going to T minus right there. And there's T minus. T minus owes us 478. And finally, T minus has a little bit of a plus sign. Remember yesterday we were in negative here. Yeah, this is a negative. Now it's gone to a little bit of a positive. Where's my stop? My stop is sitting right here in midfield. And we're waiting for it. No, long distance. This is the green line. This is my green line defender. So on the green line defender, we got to get more power and pass the ball down to the black line. And then the black line will then pass the ball down to the short defense. But it is what it is. Monster moved up. Notice, Monster last week, if those of you who saw my video last week, Monster was something like, egad, I mean, it was bad. It was like in the minus 30s, really bad. It was like $1,100. I know it was $1,100 minus. This was $1,100 minus last week. And I'm going, look, I only got in this trade. Oh, this is a note from one of my classes. Day traders. Those who are thinking about day trading, understand it's a job. It's a job. You're in at 6:30. You're out at 1 o'clock. You're trading in 5-minute time frames, and you commit all your money to play, and then you got to follow some very strict rules in there. And one of them is do not have more than 3 or 4 trades on at a time, because you got to watch all 4. And that's why you see some day traders with 4 monitors in front of them. That's why, because they're watching 4, maybe 6 monitors. They're watching 4 stocks, and they're watching 2 others for what's going on around the world. Bottom line is, our target is to overcome the 174 indebtedness that Marcin owes us from previous trades, and then we'll take it. We'll take it. We'll take it. All right, that takes us to the final of the we are in the alpha account, and that takes us to the final of the slow down. Yes, I got some good feedback, and one of it is I talk too fast. Sorry about that. I just don't want to hold your time here. As long as I keep it this interesting and keep moving, that's the bottom line. So there we are. So quad moved up a little bit. Well, actually, quad was here, then here. Now we're down here. Again, dojis are a good and bad sign. The good part is that whatever's happening is slowing down. The bad part is it's going to be looking for a reversal. So here we had this uptrend, and we're hitting this doji zone. You know, we got a stop. It's way down here at the 50% zone, and it did not hit my secret number of my ROI desired. So the end result is that I'm down here. We're down here at the 50%. Now, this is slightly different from the green defense. And what it is that in several of my schools in the past, it says, where do you put your stop when you're doing options? Now, some schools are, you go and you follow the price chart and you set it according to the price action of what you come to. Crosses below or above the 30-day moving average. That is my 30-day moving average, and I'll let you know about that one. My other guys are my secret team. But the bottom line is that on some of the schools say 50%. You shouldn't lose more than 50% on your option. Why? Because if you lose 50%, you got to make 100% to make back that loss. I mean, look at what's happening here. I got $418 I got to get back. So to get that $418 based on this price of $371, let's say, let's do the numbers. Oh, I can't do. I'm trying to do the numbers in my head and figure it out. Well, this is 78. It's $78, and I went to 7. So we need to make about maybe 15% here to overcome that. But if it was deeper, like CVS, yeah. Look, CVS is a minus 27, and I'm only at 400 on the current session. And if the current session peters out, and then I ended up with a small profit, I take it off. I got to continue playing it until I'm able to retire it off my losers list. So that takes care of the alpha league. But let's move back to XLE. And the reason I'm moving back to XLE is because here I wrote in here on my notes. And I like doing my notes on the charts. I don't have to haggle paper. I have a bad habit of making a lot of notes. And some people who have seen my office. No, we don't want to go there. Dr. Scatterbrain. Yes. Yeah, my personality reflects my office, and my office reflects my personality. I got my fingers in pies and all kinds of things. But the bottom line is that we have our loss leaders. Now, I did a count this afternoon, and now I count all the lost leaders, get this, anybody who still owes me money, any stock, any position that still owes me money, even if it's in play, because right now we have a potential of two or three exits to reduce the number. But the unfortunate thing is this. This number is actually 73. So I have 73 lost leaders to get back money on. And I anticipate at the speed I'm traveling, it might take me about maybe 6 to 8 months, depending upon how much faster we can build the buying power. Right here is the buying power. And I have also been recommended by fellow followers and some of my strong students, very strong students. You're not supposed to show that stuff. Okay, fine. I was just trying to show that this is a real account. We are real-time data. It is the 16th of September, and I'm showing the real results of trades here. The point is, I don't use data from 2009. Oh, if you got into the market in 2009, you would have made all this money. Yeah, who had any money in 2009? I had a job, and I was lucky to have a job that survived. Millions of other people across the country didn't. So I really take very strong issue when any school, any trade school, or any independent trade instructor starts using data that's more than 60 days old. You're off. You're off. I do not want to see, oh, if you did this trade back in whatever, if you got in here and you had all this money. It's well, we got in here on real life. And also too, let's see something. There's a way of doing it. I'm about to get to it. I don't have my entry marker here. But the bottom line is performance. So 73. So enough said. Let's get to the Tigers League. Yeah, get over to the Tigers and see how they're doing. And the Tigers are they only got 5 trades in play. There's one new trade in here standing by. That's UA. UA qualified over the weekend. We got into it. We'll start off with our percentage winner right now. Our percentage winner is, funny enough, it's IYR. Yeah. So let's go to IYR right there. Not a lot of money. This account is still holding its own. It's still under the benchmark. But it's still alive, it's still kicking. IYR owes 743, and when you got $11. Again, we don't fight the market, but look what happened here. We have a nice push. Now, this is being recorded on the 16th of September. Do know that sometime this week, the central bank of the United States, known as the Federal Reserve, is going to announce possibly a very strong possibility of an interest rate drop. Now, it's not going to be very big. It's not something you're going to be able to shop from the food stuff. But the slightest move down in interest rates makes a boost for various parts of our economy that depend on interest rate. Real estate is extremely dependent on interest rates. If interest rates are way too high and affordability is way too high and people don't have the money to buy, nobody buys real estate and it goes down. The only thing that goes in real estate or holds its own is rental. But then again, if the rental properties are those $3,000 one bedrooms in downtown Los Angeles, and yeah, those brand new buildings that you see in downtown LA in the news and in the paper, those babies are going for $3,000 a month for a 1 bedroom, and it's $5,000 a month for a 2 bedroom. And they are renting. I don't know where these people got jobs, but apparently they want to have the city life and they want to live in downtown Los Angeles, just like people want to live in downtown Manhattan. You want to play, you got to pay. All right, that said, let's move on to SPY. And SPY is owes us $308, and they got $10 good to their name. And again, when we're in this wishy-washy territory, I don't know what that green line stands for. You know what? I'm going to get rid of it because the less stuff you put on the charts, the more. And this is old notes. I got to keep my old notes because I go back and I do my data research. So so that's what's gonna that's what you're seeing there on the edge. And I apologize for the intrusion of it, but there. Now you can see it nice and clean here. Well, where are we on the defense? Well, the defense, again, we're at 50% of the option. This option costs almost $11. So I have a stop on the option at 535. Why am I not on the green line? Oh, wait a minute. Greg, you were on the green line defense last week and for the most of the trades of the ending of the week. Why are you not on the green line defense here and several others we saw just prior? Oh, well said, Kimasabi. Here's the idea. Again, we're back to 50%. We don't want to lose more than 50% of the option. Now, granted, you cannot fight gaps. Gaps will bust a 50% no matter what. There's no defense against gaps. The only way of a gap is it happens, you have enough money in reserves, get back in the trade, add it to your loss leaders if you are a loss leader person, because not everybody's a loss leader person. That's something else we're going to have to get into in discussion. But let me finish up here. So that's why this here. And the rule is this. If the 50% option is here below the green line defense, I will then go to the green line defense. But if the 50% option stop is above my green line defense, then I will take this stop. So that's why I have both. So I start off my trade setup. I first go and say, okay, where is the 50% option? And because I trade in after hours, I'm able to go ahead and have time to look at the chart and say, okay, it stops here, green's here, you're going to be the stop. But if 50% falls down here, which it can be down here, and the green line can be here. Well, then I'm going to go to the green line. Whoever is the closest to the money of these two. In the midline field, the closest of the black line is the money, or the Hilo system is there. And the Hilos eventually matches my black line channel. So that's it. Eventually the market actually catches up and correlates with my exit ideas. So with Dominion, now Dominion, I just noticed something about Dominion, and that's this. Its expiration is coming up. It's reaching into the 30-day zone. Now, what is the 30-day zone? The 30-day zone is the last 30 days that this option is going to be. Now, look here. Here is my stop. Oh, I am going to have to move up my defense here. But here's what's going to happen now. Come September 18, 30 days out, I will move my stop to the black line no matter what. I'm running out of time. This option is going to go belly up. I already owes me $467. Right now, it's down $15. So bottom line is I'm gonna move it up. And then after 1 week, I'll move it to my 30-day moving average line. And then after that, I'll move it to the last bar low. And those are my defenses. And as you can see, and this started here. Look, when I purchased this trade in, this matched. So that was okay. But now that we have this movement, I have to move the stop to here. 2 days later, it's going to go here. 1 week later, it's going to go here. And then, boom. I'm going to go right there, and we'll have a big. But the bottom line is one of my major instructor, John O'Donnell on Trading Academy. He says that it's wonderful to have a big win to wipe out all the small little losses. This is how the small little losses occur. All right, let's go T minus. Let's see what T minus has to say for herself. Okay, again, this has been a real jalopy. And I have to say it's a jalopy. The reason why, it's all this stuff. I mean, this thing is, it's, you know, can you imagine if you're driving a car on the road, bump, 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 no steady movement to this thing. And the Alpha account owns 478, but here at the Tigers account, it owes 315. So 315 again, and I have to watch the expiration. This is a December. So come November, if I'm still in the trade, because who knows, maybe T minus will break out. And if it breaks out, I'll be able to start moving my defenses up to eventually get to getting out of the trade. All right, finally, we get down to WABA, Walgreen, WEBA, not WABA, WEBA. And now in the alphas, it's 595. So we have not been trading. We don't have a trade in alpha because why? We have all the other trades going who got we're ahead of WBA. And so we're working on those guys. And there's about maybe once the dead leaders die off and get off the list, there's approximately three or four issues in front of WBA before WBA turn will come up. By that time, the coffers will get bigger, and the end result is this. And this is very important. You gotta have money to play, but you gotta have enough money to play. In other words, this idea of walking in and putting putting $100 down and walking out with $2,000, it happens, but not every day. And only for those who really know what they're doing, or those who are really risk takers, or someone like a friend of mine bought bought into a company called Impasse, INPH. And he got in there at a very low price, like $10 or something. The thing skyrocketed to the moon. Where he got the info, I never even saw it in the Wall Street Journal or IBD, but he found it and he got to ride it and he got to make good money on it. So congratulations on that one. And that was my good buddy named Joe. So again, here we have a little petering. And if this is showing that there's a possibility of a turnaround going up, and we can pick up $169 and close out, then we can get this one off our loss leaders list. So that pretty much covers it. There was something in the discussion, but unfortunately I forgot what it was. Oh, anyway, do some comments, tell me what you think, and moving on forward. The ultimate point is, my objective is this. I want to show that their options, doing it right, options will make you money, and doing it right, you can protect your capital. So in the rules of my trade groups is number 1, follow the rules. Number 2, protect capital. Number 3, protect profit. Number 4, check your pending orders. If they have disqualified to keep the trade in play, get your money back, go out, find something else. Number 5 becomes the real issue. Do you want to do a watch list like I'm doing, or do you want to go and just get fresh stuff? That, my friends, you're going to have to decide where is it. I like winning, and when I lose, I go back into the game and learn how to win. Now, there are certain games I don't play because I know I'll never win. Basketball is one of them. I play basketball here and there with good buddies, but there's no way. There's no way you're gonna see me on a basketball court. That's one game that I'll surrender and let it win me. But here for the stock market, we're all on the same playing working field, and the bottom line is it's doable. So that's it for the winners and losers of 2016. XLE takes the lead with 123%, and I thank you.